One great thing about Roku managed to grow its ARPU, its average revenue per user, more in 2021 as compared to 2020. What's good, YouTube? Ovidio here. Welcome to Stockbites number 4. Today I'm taking a close look at one of the most beloved stocks during the COVID-19 pandemic, Roku. It has provided some of the best results for investors in 2020, and now it sits around 50% below its all-time high. I'm gonna see if Roku is still a good business and it is worth investing in. Alright, let's get straight into it. Alright, let's get started. I have here first the executive summary. Roku is one of the streaming pioneers and one of the biggest players in advertising industry. And in this report, I will be focusing on the fundamentals of the business and see if it's still a good investment. I'm gonna start with its mission. So our mission is to be the TV streaming platform that connects the entire TV ecosystem around the world. We connect users to the streaming content they love, and we enable content publishers to build and monetize large audiences and provide advertisers with unique capabilities to engage customers. So that's the mission. We see it pretty clear. It is aiming to help people navigate from linear TV to streaming while enjoying a great experience. And in terms of risk and reward, usually those companies that are trying to create a major shift are some of the best bets, but they can also carry a high degree of risk. Alright, investment thesis. We have here 3 reasons why Roku might be a great investment. It is a global CTV leader in terms of streaming time. It has tremendous edge in targeting and optimizing advertising campaigns, even by its first-party data for more than 50 million users in the US. And CTV is the fastest growing video advertising platform as cord cutting intensifies around the world. A company overview. Roku is a software and ad tech company founded in 2002 in the US. It started initially by selling its hardware that could be connected to smart TVs. And in 2014, it launched its first branded TV. The company has benefited from significant tailwinds during the COVID-19 pandemic. Roku's revenue has grown consistently with over 50% annually for the last 4 years. And it did a tremendous job so far in competing with much bigger players in the space. At the moment, the company is valued around $30 billion. And in this analysis, I'll be trying to highlight some of its fundamentals to see if it may be a good investment. I'm gonna start with product overview. So connected TV or CTV refers to the viewing of digital content of internet connected televisions. So every TV that's connected to internet is a connected TV, including to standalone devices or gaming consoles and smart TVs. In order to understand fully the CTV world, I need to emphasize that there are 3 main types of internet video streaming, and the first one is the subscription video on demand, which is, for instance, Netflix, HBO, or Disney. That's a service that allows users to access an entire library for a small recurring fee. Second, we have the TVOD, the transactional video on demand, which is usually a pay-per-view event, so the user is charged per video or for video package rather than gaining access to an entire catalog. And third, we have the AVOD, the ad-based video on demand. For instance, we have the Roku channel, we have YouTube, so those are services that are usually free to consumers, but in order to have some revenue coming in, they're using advertising and marketing campaigns. Alright, I'm gonna start with Roku's product suite. It has a couple of streaming devices, so it has sticks, it has devices for streaming, and it has its own branded TV. What's in the middle of all those and what's the most important aspect for Roku, it is its platform. So it is its operating system, the Roku OS. The Roku OS is purposely built for TV and designed to run on low-cost hardware, which allows us to manufacture and sell streaming players that are affordable. And it has the Roku TV, which is manufactured by some TV manufacturers around the world, like TLC, Hisense, Philips, and they use their Roku OS on those on that hardware. And most of those Roku TVs are sold at Walmart, Target, Amazon, or Best Buy. In order of distribution, we see here that Amazon, Best Buy, and Walmart are collectively accounting for 69 and 72% of the player segment revenue at the end of 2020 and 2019. Offering a wide range of content will drive user engagement, and right now it offers around 500,000 free and paid movies and TV episodes, including sports, news, and kind of everything that you want to see on the linear TV. You can also find on Roku. We see here the key investment areas. So for Roku, one of the most important aspects is its ad-based video on demand. We have the AVOD channels that are very appealing to customers who are facing subscription fatigue among the proliferation of subscription video on demand. like Netflix or Disney. The proportion of customers using AVOD services has increased from 34% in February 2020 to around 58% in February 2021. So that's a major increase in the number of people that are willing to access an AVOD service. A study done by the Horowitz Research found that 48% of the US TV viewers use AVOD as a way of watching free content. So we see here, in terms of AVOD, the biggest platforms are, first of all, YouTube, and second of all, the Roku channel. Moreover, in some geographical areas like Latin America, 70% are watching AVOD platforms. We have a study from Criteo that found that 61% of the Americans say subscription cost is their top consideration when using a video streaming service. And they found that 3 in 5 people are happy to watch video streaming devices with a fully or partially ad-funded subscription. Also, the trade desk found that 64% of the consumers don't want to spend more than $30 each month on streaming video, making this AVOD service more appealing. So more people are willing to watch some advertisement in order to have free subscription. In this sense, the Roku channel is set to roughly half the ad load of traditional TV. So they're gonna offer great content with only half of the ads that a person would normally see on linear TV. However, the weak point for AVOD is that the fact that the publisher doesn't know exactly what person is looking, because a login is not required, and hence you don't know exactly who's watching unless you are the platform owner, right? Because as the platform owner, Roku knows who's watching because you're signed into your account to be on the platform and to see that. And as a result, they can serve you better advertisements, better marketing campaigns, and hence increasing the CPM, which is cost per 1,000 impressions that Roku gets from the advertising companies. So Roku has this data, and it is very, very useful for them in order to have a higher CPM. Here we have the Roku channel. The Roku channel is Roku's own streaming channel that drives user engagement on the platform by providing free ad subscription access to a large library of third-party content that Roku directly licenses, in addition to content made available to the Roku channel by their own content providers. For instance, HBO or some other publisher may provide Roku with some non-premium content in order to be streamed on the Roku channel. The Roku channel has also the premium subscription offering, which is an ad-free premium content subscription service. So for instance, the user might be paying like $10 and it might have access to some content from Showtime or Stars or Epix, and without any of the advertisement. We use our knowledge of our viewers and the data we have to find out what's going to perform well on the Roku channel. We also use the data to target promotions, the appropriate content promotion based on the user. So we see how the Roku channel works. It is basically a way of engaging more audience by creating great content. So the company creates or licenses great content, it drives in audience, and then it sells advertising on the platform by using the data gathered from the audience. So this is a good example of the network effect. The network effect is a type of moat that is described as the more people are using the platform, the better the platform will be. For instance, we have a good example in Facebook, and that's kind of the same thing that happens here with the Roku channel, and which is AVOD service. Alright, in terms of number of users, it had around 70 million accounts in the first quarter of 2021. The Roku channel is growing extremely fast, as this is a big driver of our P&L. It is growing much faster than the overall platform and even the AVOD segment, the ad-supported segment overall. Right? So the Roku channel is growing very, very fast, and we have here some highlights of the content. Licensed content from more than 200 content publishers, 70 linear channels, and premiered 23 new Roku original titles. Alright, now a very important thing regarding the Roku channel. This is a critical aspect for Roku. Recently, besides licensing ad premium free content from its partners, Roku has decided to enter the market of content creating. This is a very risky and potentially costly move, but Roku announced it will develop more than 50 shows over the next 2 years. New York Post reports that the budget will be on par with basic cable shows, which translates to $200,000 to $700,000 investment per unscripted episode and $500,000 to $5 million per scripted episode. So Roku right now is making a very bold move because it enters into different area of investment. It will pour money into this investment without having a guarantee if it's gonna work or not, and the company must be very careful because there are much bigger players in this space like Netflix, Disney, And since all those bigger companies are creating content, it will be very costly for Roku to attract some talent and to build something really meaningful and with a low cost. Another important aspect for Roku is its international expansion. So they have 4 investment areas: international expansions, Roku TV, the Roku channel, and advertising. And their international strategy involves the same 3 phases that have worked in the US, which are, first of all, growing the active accounts, second of all, growing engagement, and third of all, monetizing those users. And so internationally, we're still primarily in the growing account phase. As we can see here, share of viewing time by device, we have in the third quarter of 2021, on the global screen time, we have Roku as the leader. As we can see, it was the leader in 2020 with 32%, and now it has 31.1% of the total global viewing time. So Roku is the undisputed leader. But what we need to emphasize here is that most of its streaming time comes actually from North America. If we're gonna see it here split by continent, we see that in terms of North America, Roku has 39% of the market. But in the other markets, for instance, in Europe, Roku only has 6%. In Asia, it is non-existent. South America, only 5%. Globally, yes, Roku is the biggest. It has 31%, and it also has a significant advantage as compared to the second place, which is Amazon Fire TV, with only around 17%. So that's a big gap between the first and the second one. But still, Roku is non-existent in most of the world. In 2020, 38 of the smart TVs in the US that were sold were running on Roku operating system. So we have surpassed Samsung. We are the number 1 TV operating system in Canada with 31 of the smart TVs market, right? Roku is growing in the US. It has a very strong presence in the US and in Canada. A study conducted by Hypothesis Group also showed that Roku is the number 1 streaming player in Mexico. In Europe, one of the most prolific markets, for instance, Germany, has almost 50% of their households connected to a subscription service. In Germany, Roku has barely launched in 2021. The same for UK, where it launched its TVs in 2021. Roku has fallen behind the bigger players, behind especially Fire TV, which is Amazon's, and then Google. So Google has its Chromecast since 2014 in Germany. So those companies have a big advantage in terms of market presence. Business model. In terms of business model, how does the company make money? The company generates revenue in 2 ways. First of all, the player revenue. It is generated primarily from the sale of the streaming players, so that's on the hardware side. We expect to continue to manage the average selling prices of our streaming players to increase our active accounts. So Roku doesn't plan to increase the player revenue, so the most important part of its revenue comes from the platform revenue, which is generated from the sale of digital advertising and related services, content distribution, subscriptions, transaction revenue share, premium subscription billing services, and the sale of branded channel buttons on the remote controls. In terms of seasonality, for Roku, the fourth quarter of the year is usually the most important one. It has the biggest number of viewing hours, and it is able to monetize it better in terms of advertising. In orders of KPI, I'm going to describe now some of the operating key performance indicators that are used to evaluate the company, and that's one of the most important aspects. We have here, first of all, the most important one is the active accounts. So as we can see here, the total active accounts and the new accounts added each quarter, and we see that the company has grown tremendously. 5.2 million users added in fourth quarter of 2020. That's a significant growth. The trend has declined a little bit for the new accounts, so only 1.3 million users have been added during the third quarter of 2021. So the company defines active accounts as a number of distinct users per account that have streamed content on the platform within the last 30 days. And we can see here that the growth has already slowed down a little bit, and this might showcase that Roku needs to expand internationally as fast as possible because the US market might be already be saturated. And we have another important aspect. We've seen TV prices significantly higher in 2021 because of the supply chain disruptions, which led to inflation and represented a headwind for the company's ability to attract new users. So those two in conjunction have really put some pressure on the active accounts growing for the company. In terms of hours streamed, this is an important metric. We've seen it growing consistently except for the second quarter of 2021. But in terms of hours streamed, Roku's revenue isn't tied to the hours streamed on the streaming channel. Number of streaming hours does not correlate with the revenue. It only happens so for the AVOD service, so for the advertising video on demand content. Roku only monetizes more streaming hours. So the more streaming hours Roku has, the better it can monetize it and the more ad impressions it can sell on its platform. We have here one of the most important metrics, average revenue per user. This is crucial for the company. It is the platform revenue for the trailing 4 quarters divided by the average of the number of active accounts at the end of the current period. And you see here the formula ARPU is platform revenue by number of active accounts. So how much revenue can Roku have for each of their active users? This metric has consistently been growing. I've done here a comparison year over year because of the seasonality, and as we can see here, the company has been growing consistently, the ARPU. And one great thing about Roku managed to grow its ARPU, its average revenue per user, more in 2021 as compared to 2020. As we can see here, it has attained a 48.5% average revenue per user year over year in Q3 of 2021, which is a phenomenal job for the company. So in terms of ARPU, Roku has done a tremendous job. The Roku channel is growing extremely fast, and this is a big driver for P&L. It's growing much faster than the overall platform and even the ad supporting segment overall. Roku's ability to monetize. I'm gonna go over a couple of things that are going to influence the monetizing abilities of Roku. First of all, we have the shift to OTT, over the top. This is a decisive factor. So over the top means streaming content, everything that's streamed, including CTV. We have CTV and non-CTV. For non-CTV, we have desktop, mobile, tablet, everything. And we have here displayed for CTV. So in terms of monetizing, the faster the shift towards streaming and towards OTT, the best it will be for Roku, especially on the CTV side. Roku's platform makes it very easy for the content publishers to distribute and monetize their streaming, so it also has a billing service. Here, Roku Pay. Roku Pay is the platform billing solution, and it charges a flat 20% fee. So for each member that activates a new streaming service, a SVOD, and it pays for it, Roku charges 20%. For the AVOD, monetizing, Roku has two ways. It has first the inventory split. As you can see here, it takes 30% of the channel's inventory routes to Roku. So this is for the small publishers. 30% of the channel's inventory routes to Roku. So it takes 30% of the ad inventory. And for the Roku sales representative, Roku manages 100% of the channel's advertising inventory and will share 60% of net revenue earned on paid advertisements in the channel with the publisher, net of a 50% operational and serving fee. So in terms of fees for the Roku sales representation program, which applies for the bigger publishers, Roku, what it does, it charges 15% as an operational service fee, and then it charges a 40% of 85% left. So it has a total fee of 49% of gross revenue earned on paid ads. Customer concentration risk. In terms of concentration risk for the platform segment, there isn't any, only 10% for the biggest customer. But in terms of player segment, those three retailers, Amazon, Best Buy, and Walmart, are accounting for around 70% of the company's revenues. In terms of advertisement platforms, Roku operates an ad manager, which allows advertisers to target to the right streamers through exclusive Roku audience data, while allowing you to the flexibility to control campaign budgets, audiences, and goals. And I have here a quick scheme of how programmatic advertising is done in this in the industry. And we have here the advertisers, and we have here the publishers. So the publishers are the websites, or in this case the channels that have content and have ad spaces, and the advertisers are gonna use an ad server, in this case Roku's ad manager, and then they're gonna use a DSP, a demand side platform, that's gonna go into relation with the SSP, with the sell side platform. Those are exchanges that buy and sell advertising automatically. This Roku's ad manager is a self-serving ad buying tool, which means that Roku only sells the software to an agency, and the agency traders, meaning advertising people, will use the software to buy advertisement space. The agency is fully in control of the campaigns, and Roku will only charge a platform fee. But besides the Roku's ad manager, one of the more important aspects for Roku is it has also the DSP, the demand side platform. Roku's OneView. OneView is a demand-side platform that has been acquired by Roku for around 150 million. It allows marketers to plan, buy, and optimize their video on Roku's devices and services. OneView has some characteristics that makes it really attractive for the advertisers. It serves programmatic advertising, automated, incurs a low cost, and can be very effective in targeting. On the publisher side, Roku owns all the ad space for the Roku channel. In Q1 of 2021, total TV streaming ad impressions delivered through OneView nearly tripled year over year, while total impressions on the Roku platform, sold by Roku or its publishers, more than tripled. OneView can also activate as an independent demand-side platform, and it can buy ads for both Roku's inventory as well as for other publishers from the open internet or publishers including Google, Facebook, or Amazon because of its really strong cross-screen use case. So it uses its automatic content recognition software to retarget a user on a desktop or a mobile, depending on what they've watched on Roku. Besides that, the programmatic advertising space is very costly, so around 37% of the budgets paid by the advertiser towards the publisher are in fees, and with this presence on the supply chain, Roku can obviously get a chunk of those 37% back. Roku's first party data, this is a very important thing for Roku. So Roku's first party data is a transformative thing for the business because Roku has very good data about the users, who they are, device ID and registration data, but more so it has very good information about what they're watching. So channel usage, search history, linear TV viewership. So Roku encompasses all of these into a Roku profile data, and using its automatic content recognition, the ACR software, Roku can track what its users are watching if they have given their consent to receive marketing materials based on their activity. For instance, while on Facebook, the user might receive targeted ads based on what he reads, writes, or likes in the newsfeed. This is the same thing for Roku. Roku knows at all times what you're watching, and it will serve you ads based on that. Right, in terms of growth opportunities, it has done some acquisitions. First of all, it has acquired some content for the Roku channel program. And second of all, it bought some of the technology. For instance, this ACR, this automatic content recognition, the company was using it, but now it bought it. A very important thing for the company is the management team. Right here, Roku is led by CEO and founder Anthony Wood. He founded the company in 2002 and he has been the CEO since. He is also the chairman of the company since February 2028. In terms of reviews, he has a good score on Glassdoor. But what I'm more interested in is the ownership. So the CEO owns around 17.2% of Roku. This is a very big amount, very high percentage, and it shows high influence from the management, especially voting power. Another thing that I like to focus on management is in terms of revenue and earnings guidance. How did the management acted before? Do they respect their guidance or are they falling behind? As we can see here, in terms of revenue, Roku has consistently beat earnings, and in terms of earnings as well. And we have here the blue line, which is the analyst estimates, and we have the dark blue line, which is the actual result for revenue and for earnings as well. So in my opinion, management is a good strong point for Roku. In terms of industry overview, we have here the total addressable market. So Roku's total addressable market is $60 billion that advertisers spent in 2020 in linear TV advertising. The amount keeps growing, and some of that amount seems to be following consumers into the streaming space, right? So we see here something from eMarketer. We have the combined US linear and connected TV ad spending. In terms of spending, as we see here, the connected TV ad spending will grow consistently over the next couple of years. If you look at the TV time in the US, today adults 18 to 49 spend 42% of their TV time streaming. But if you look at the amount of ad spend on streaming versus traditional TV, only 22% has moved to streaming. Right, so there's a gap, this big gap, and that gap is starting to close, but has a very long way to go. The rate of the closure, because they will catch up eventually, and the rate of all viewers moving to streaming, those are the biggest drivers of our ad business. The advertising upfront process, you can read more on the Substack about this process. The existing trends, why is the advertising so attractive? Mostly because of its capabilities of targeting and measuring. So that's a tremendous opportunity. Was the pandemic the peak for streaming content? The evolution of entertainment reports from NPD highlights that the time spent watching TV, shows and movies in the United States in the first half of 2021 rose 4% year over year. Moreover, reports from Conviva shows us that the global viewing for CTV has grown as compared to 2020. We have here for the second quarter of 2021, connected TV grew with 5% globally, while in Q3 the same trend occurred, so 5% growing. According to Nielsen, ratings for adults 18-49 traditional TV fell 19%, creating supply shortages and increasing ad prices. As a result, the top 10 cable TV advertisers doubled spend on the Roku platform year over year. Total monetized video ad impressions nearly doubled over a year, driven by strong client acquisition and retention. Alright, the fastest growing video advertising platform is now CTV. How much does a TV ad cost? So the CTV advertising rates for CTV are most costly then are more costly obviously than linear TV. The median cost per 1,000 impressions for broadcast or linear TV is 10 to 15 CPMs. The CPM for YouTube videos is between 20 and 25, and for CTV is between 35 and 65. So we see significantly higher amounts for CTV. Almost 40% of adults watch video daily on CTV and 60% of them watch it weekly. So the trend remains very strong. People are still streaming content, people are still watching daily and weekly content. So the pandemic seems that has set a new trend. In terms of competition in the streaming space, it is undoubtedly fierce. Roku competes with much larger companies that have resources and brand recognition that pose significant competitive challenges. The intense competition is a significant risk when investing in Roku shares, and you must take this into account. We have here some examples for CTV devices. We see here, besides Roku, Fire TV, Apple TV, Chromecast. We see those streaming devices, and we have also some connected TVs from Sony, from Samsung, Vizio. So Samsung is one of the leaders in terms of its OS. Besides its current exclusive manufacturing partner like Japanese manufacturer Sony, Google is allegedly willing to pay hefty amounts to other Chinese TV manufacturers like TCL to install its software on connected devices. Google is willing to pay manufacturers from $10 to $15 per unit compared to Roku's 7 to 8 per unit. Right? So we can see the danger in competing with a much bigger and much stronger player like Google. Google has a meaningfully bigger budget than Roku, and so we can see what this can do to a company. Google is basically doubling the amount that Roku is spending, and it is saying to the producer, to the manufacturer, hey, look, I'm gonna pay you double. I want you to produce this TV with my operating system in it instead of Roku's. Right? So this is a very, very important aspect for Roku. The competition. TCL announced it will now sell its top-notch quality TVs with both Roku and Android operating systems. So far, TCL has been a long-term partner for Roku, and he has been really selling Roku OS systems for many years. Other established companies are following Google examples. Comcast launches X-Class TV. Moreover, Amazon also launched its first ever Amazon-built smart TV in September 2021. We see LG announced that more than 20 international TV manufacturers have already committed to its WebOS partnership. So there are a ton of manufacturers that are going to bring their OS, their operating system, onto the market. First of all, the competition from the more powerful and established players may be too much for Roku. Second of all, creating its own content for the Roku channel means Roku is entering another brutally competitive market, and more experienced players are there already. As a result, the company's P&L might be seriously affected and the margin may suffer. Growth in active accounts is already slowing, as we've seen the trend. Very small international presence compared to its competitors. Growing estimates are skewed because of the pandemic, and Roku won't be able to maintain the pace. In the future, advertising spending shift from linear TV to streaming won't happen at the pace that Roku anticipates. Alright, financial overview for the company. First of all, I'm going to look at revenue and adjusted EBITDA. As we can see here, the trend is very nicely growing. We see this is the estimated revenue for 2021. Significant increase. We have the margins, gross margin surpassing 51% for the first time, significant growth. We see here adjusted EBITDA 16%, doubling from 8%. Everything seems to be looking good in terms of yearly results. Now I'm gonna go on platform versus player revenue. So this is the revenue for platform, which is the most important aspect of the Roku's business. As we see here, Roku had 67% margin. 67% margin in the first quarter of 2021 for its platform revenue, which is significant. And right now it declined to 65%, but still it remains above 65% for the last quarter, which is a very, very important aspect for Roku. Looking ahead at the player business, as a reminder, we do not optimize for player gross profit, but rather account growth, right? So they're gonna take a small loss in the player sector in order to drive more engagement on the platform. Player revenue and player unit sales were both down 26% year over year following the pandemic-related spike in Q3, but remained above pre-COVID levels. As you can see here, the quarterly results for Roku. These are the estimates for the fourth quarter of 2021. In terms of guidance, management offered a lackluster guidance for Q4 of 2021 in terms of margins, indicating challenges created by the supply chain distribution. Management expects that the headwinds to continue in 2022 as this was largely a function of lower inventory and higher component cost being passed along to customers. So overall US TV's prices increased 42% year over year. Right, so TVs are commodities. A 42% growth, it is significant, and of course there are not many people willing to get a new TV in these conditions. US TV sales fell 31% year over year. In terms of balance sheet, we have here the company has plenty of cash on its hand. It's really important here is long-term debt. There are absolutely no worries in terms of long-term debt. With only 82 millions. Since Roku became public, we can see here total shares outstanding. On filing date, Roku became public at the end of 2017. It had 99 million shares. Right now it has 134, so 134 million. So the number of shares outstanding grew 35% from the end of 2017 to right now, to 2021. And we see dilution compound annual growth rate around 8%, right? So if you would have bought the Roku stock at the end of 2017, you would have been diluted 8% year over year. It is not a very high percentage, but there's a risk that you should take into account. Another important aspect for the business is capability of generating free cash flow. Free cash flow is cash from operations minus capital expenditures, and it generated cash flow for the first time at the end of 2020. It had free cash flow over 66 million. Moreover, I'm gonna look at the quarterly free cash flow, and I'm gonna take into account the free cash flow conversion rate, which is free cash flow divided by EBITDA, and it shows the company's ability to transform the free cash flow from EBITDA. The free cash flow conversion rate has been very volatile, being negative in the first quarter of 2021, but now showing a significant increase in the third quarter. In terms of valuation, Roku has experienced a major drop in its multiples. If we're gonna look at the next 12 months, enterprise value divided by revenue, Roku has a multiple around 7.5, which is lower than its mean from the end of 2017 when it got listed, and around 70% lower than its highest value of around 27 achieved in February. I'm looking at enterprise value because it is a more accurate measure of the value of the firm, as it includes the debt, value of preferred shares and minority interest, but minus cash and cash equivalents. And as we can see here, the company has reached some levels that have been actually reached before the pandemic, so it kind of got back to where it was valuated before the pandemic, which is a good sign for the company. When compared with some of its advertising peers, Roku seems to be still trading at a premium. I've done a scatter plot here, and I've included also some solid established companies that do not have as many growth opportunities as Roku, as we see here, growing at over 40% the revenue compounded annual growth rate. Roku and Magnite are some of the highest growers companies in the industry, and Roku sits right above this trend line, which translates into it trading at a premium. In terms of technical analysis, Roku has had a difficult 2021 as it hit this 480 resistance price multiple times, and right now the company has decreased to around $200, which was a really strong support before, as we can see here in November 2020, and now is acting as support right now. We see a strong gap. This gap was on the day that Roku and Google announced that they're going to continue the relationship. We came back to the 200 level, and it seems like we might be having a kind of a double bottom here. So this might look like a double bottom, something like this might happen. But as you can see, very strong close. This purple line is the VWAP, is the anchored VWAP starting from the lows of March. So we might have another resistance here at 265. This price line, once price got to 265, it got rejected on multiple occasions. And I really like this closure. So we closed on the 17th of December. We closed above it with a very strong close. And we might actually go higher from here until 265 and then come back a little bit. Anyways, the thing is that Roku's stock is very volatile. It is a high growing company. What I would have preferred, to be honest, I would have preferred if it would come back to 170. So this 170 area is actually an old resistance for the company before the pandemic in 2019. So it hit it twice. So usually old resistance becomes new support. So it was a resistance here, but unfortunately the stock didn't come back to this price, but it came back to 200, perhaps making a double bottom, a really nice double bottom. And we're gonna see how things are gonna evolve, because all this price action isn't necessarily tied to the company, but we We have here a very unsafe macro environment. We have here inflation, interest rates are going to grow, stocks are going to be impacted one way or another. So I think we still might have a pullback in the indices, and we might actually have a pullback in the growth companies, although the Roku stock is down around 50% from its all-time high. 50%, and it was down like 57%. So this is a very significant level. But what I would do is I would expect it to consolidate a little bit. As a conclusion, I would expect it to consolidate a little bit, perhaps come back to this 200 level, and if it holds, I would open a position, of course. If you're in a position, open a position. You have two ways of doing it. First of all, open a position and put the stop loss before this candle, or open a position and put the stop below here. If we take out this candle's low, we might coming back lower to 170. Alright, and to conclude, with its data measurement and analytics, Roku has tremendous potential to become one of the most dominant players in the advertising space and join the ranks of Google, Facebook, or Amazon as walled gardens in the industry. Given Roku's recent pivot towards content creation, management must navigate this carefully so the margins won't be affected. However, I trust the management will take this task carefully and minimize the risk with this bold move. And if you feel like streaming will become the dominant way of viewing TV and Roku will successfully defend its market share to the Amazons and the Googles of the world, then Roku would be a great investment. Alright guys, welcome back. That was Stockbites number 4. If you feel like you've learned anything of value from our Roku's analysis, or you want to see more in-depth stock reviews, please consider subscribing. Until next time, keep crushing it.